everybody. Welcome to the program. So that we know you can see and hear us. Please say hello in the chat. Tell us where you're listening in from, please. I'm here in Chester, New York. I have Frank Agostino in Hackensack, New Jersey. We have Ruben at an undisclosed location in Texas, San Antonio, maybe. I don't know where he is. And where?
Austin, Texas.
Boston, Texas. Oh, Austin. You have that funny accent there. And Jason is, I think, in New Jersey trying to get in. Hello, everybody. It's a big group, so we're going to take just a minute for everybody to populate in. If you're watching this on YouTube, you need to subscribe to the channel to be able to get the handouts. And they're still coming in. What a great full group we've got. All righty. All right, I think we're in recognition of the fact, I think most of the people have populated into the room, and recognition of the fact that it's tax season and you're all busy. Let's pop in here and let's get started. So everyone, welcome to Navigating OBBA 2025, Child Tax Credit Compliance and Social Security Number Validity. My name is John Sheely. I'm here with Frank Agostino, Ruben Valdez, Jason Dowtry. Welcome to the program. A couple of quick commercial items. This is how we're able to bring you these items for free. For those of you interested in international tax, our 13th annual conference is October 26, 27, 28 in New York City. Please save the date. If you're not a subscriber, we're able to bring you free content like this because we also run a subscription-based continuing education program. $52 a month gets 22 hours of new credit a month. But if you don't need that, we do at least one program free a month, and we bring you all of Frank Agostino's content free, which is about 96 hours of content each year. If you want to join us, this is savings today to save in the one-time sign-up fee. Use that QR code. Use the code SAVE50, S-A-V-E 50. This program qualifies for one credit for continuing education or continuing professional education from the Internal Revenue Service, NASBA, Texas Board of Accountancy, or California Tax Education Council, or New York and New Jersey attorney legal continuing education. There'll be 4 polling questions during the hour. You need to answer 3 of them. We'll be very happy to give you the credit. If you're watching this on demand, you only need to answer 75% of the questions at the end. You can click the link and take the quiz. During the polling, depending on what type of device you're watching, you need to click that little radio button to the left of your answer. If you're watching this on a mobile device or a tablet, you might need to, the alignment might be off, you might need to click a little bit to the left. If you have a problem, put it in the chat. Lisa is here with us monitoring, and she'll be happy to try and help you. Credits are issued in about a week. They'll be sent to your email address on record. Please wait at least a week before asking us where your certificate is. We really appreciate that. If you have a question that you'd like to ask, to the right of the chat is the Q&A tab. Please type in your question. We'll take them usually in the order they're put in there. However, there's an option to upvote it. So rather, if you have the same question, rather than re-entering it, upvote the question you already see. It'll raise that question up. We'll know more people are interested in it, and we will probably get to it a little more quickly. There are several handouts, a copy of this program, along with the slide deck, along with a written 24-page article by Frank in his office, which is extremely valuable. Those things are all available in the handouts tab. If you're watching this on YouTube, they are available in the chat. You just have to subscribe, and it should be the first chat. If you're watching this on self-study, you want to click on the lower right-hand corner. There are 3 icons. The one that looks like a piece of paper, it will give you a link to the handouts. You'll also see a link in that handouts that says how to take the quiz. Right. So, Frank, we're going to turn this over to you. Navigating OBBA 2025.
All right. Thank you, John. And thank you, everyone who subscribes and who attends these things. John is graciously putting this together because we, all of us who are sitting here, and that includes Jason and Ruben, have gone through a very difficult period of time having to explain the government's change in the entitlement to these benefits. Right? So when we give you tax advice, it is not political. We try to go through the plain language of the statutes, the guidance that we're given, the Taxpayer Bill of Rights, and get you to the right answer. This is one of the few times where we're getting on where the answer may not be what we think, what we had hoped the answer would be. So we're navigating OBBA, and we're looking at CTC compliance with Social Security validity. All right, so let me try to get us to the next slide. All right, so why is this important to everyone? Because of the credit, right? I mean, the amount of money that goes out, after the middle of February and in March on the credit moves the United States economy. Right? There are actually songs that have been written about tax refund time. And those refunds are driven by these refundable credits, right? The child tax credit, the additional child tax credit. So what we're doing and why this is so controversial is that the provision in OBBA has limited families' entitlement to the credit for just the criteria of do you have a valid Social Security card for work? Okay, so that's where we start. Anybody else want to say anything about how difficult people have been when we tell them what the rules are this year?
Absolutely. Well, thanks, Frank, for the introduction. Well, first of all, we are used to having parents that have ITINs, mother and father, claiming their qualifying child. And prior to the OB3 they were eligible to claim that credit. But now we have individuals that are coming to your office following this return, and they come to a surprise that they no longer qualify for the child tax credit. Now, John, I do have a question. Do you want me to do it in Spanglish or English only?
I think we should run it in English only, and as people ask questions, maybe we can answer questions or re-explain in Spanish if needed.
Perfect. So we have people, right, that come to our office. We have two individuals, right, that every year they've been able to claim the child tax credit, and now they come to a surprise that maybe their withholding was not enough and the child tax credit is no longer eligible to be claimed because they have an ITIN. And specifically, we're going to talk here about the 24H7, Code Section 24H7, which governs the identification, the SSN requirement, part of it. We're going to talk about 24H7 and then also the earned income credit, which is 32M. We're going to talk about that here in just a second. But now they come to surprise that they don't qualify for these credits, and we have to explain this to them. And then to add to the confusion, we've been informed that the IRS has been issuing notices of when mom and dad have an ITIN and they have a qualifying child. And they've been getting notices that they may qualify for extra cash. That's what it says. So now we have a lot of things to explain to them. And it becomes a very difficult situation because now we have to educate them and we have to kind of put this puzzle together. So yeah, we're going to talk about all this stuff, which is very relevant to a lot of the mixed families, such as mom has a valid Social Security number, valid work permit, and then the father has an ITIN. We're going to talk about that here in just a second. But I don't know if Jason wants to add a little bit more to this.
Well, the main thing, first of all, I don't think I get enough credit for getting into this webinar on my own. I should get some kind of praise for that because I got in just in the nick of time. I did figure it out. So I'm very proud of myself. So whenever I got to pat myself on the back because no one else will do it, right? So, I do want to say my issue really is coming into play with these due diligence audit, as Ruben, as you was just saying, how you have to explain this to a lot of clients. I'm having to find myself explaining this to a lot of revenue agents during due diligence audits, because with confusion becomes a lot of overdoing it and people trying to CYA cover themselves and just collecting a whole bunch of stuff that's really unnecessary. But at the same time, you have the IRS who's also doing this, who's also expecting a lot of unnecessary stuff. So, and we'll get more into it, but what I can say is from my end, I actually just had a due diligence audit this morning, and the revenue agent asked for social security cards for every client, for this reason. And so we spent probably a good 20 minutes just explaining the new laws and what's not required and things like that. So that's where the confusion comes in on my end. We don't, as far as a practice, in our particular practice, we don't have a lot of people with ITINs, things like that. But again, during these due diligence audits, this has been coming up a lot from the revenue agent side. It can get very confusing in that aspect.
So I guess let's go. Why did we get to confusing? Because as we know, last year, we have ITIN taxpayers who are doing the right thing. They come in and they get their tax return prepared, notwithstanding all of the rumors that their ITIN numbers and their information was going to be going to ICE. They came in, they did their duty and had tax returns prepared, right? And there were money that Congress had set aside for children, right? This was, earned these credits all have children in it, right? It should have nothing to do with the parent. But this year, right, our two ITIN holders, they come in, they have an ITIN, or they have the Social Security, the number that says, authorized for work last year, but maybe it's not authorized this year. And what kind of credit do they get? Zero. Maybe they get the fallback credit for other dependents of $500, right? So that is a very disappointing moment when you tell them, like they're saying, how much is my refund? And you say, nada. And they say, did you translate that right? And I said, you could call Ruben. You're not getting that refund.
And not to mention, right, and in a lot of communities, they believe that if a tax return does not yield a refund, something must be wrong. There's something definitely wrong. And remember, it's not just about getting a refund. But go ahead, Frank. I'm sorry to interrupt.
No, you shouldn't interrupt. I was going to say, there are, and that, I'm out of the real preparation business. I do a lot of defense, including criminal tax defense. And I've represented a number of return preparers who said, why would you ever do a tax return if it doesn't have a refund? I only get paid if there's a refund. So I'm not even going to print it out if that number doesn't show refund. So that's the community that we're dealing with, of the taxpayers. And I can't tell you how many tax professionals I have represented that have like 500 tax returns, 500 refund returns. They've never prepared a return. So we had one client, we had to go, those of you who come to tax court to watch how we do these cases, right? We had one woman, she got on the stand, said 472 tax returns prepared that year, 472 refunds. And she said, I don't think I don't think I've ever prepared return that doesn't have a refund.
That's the problem. Well, so in the good side of things is that a lot of these people will most likely qualify. They have a qualifying child, they can fall back onto the other dependent credit, and obviously a qualifying relative can qualify for other dependent credit. And I know that we have people of all levels. The other dependent credit is a non-refundable credit, meaning that if you don't have tax, then it's not going to really make a difference.
That's been the problem. Right. So then the next question is, because they show you that they have the numbers. So we have to get what is the Social Security number? And it really comes down to, it has to be a valid Social Security number. So just because you have numbers doesn't mean it's a Social Security number, right? An ITIN is not a Social Security number for these purposes. A Social Security number for these purposes must be valid for employment. Okay, so that is one issue that almost leads to fist fights. What do you mean? The government gave me this number. I paid for this number. I can't get my money. And then the second thing is the people who believe that the number is good for life. And they said, my preparer got me the refund and I got the check last year. What are you talking about? But then the issue is it has to be valid on or before the date of the tax return is filed with extension. Last year's number is not good for this year's tax return. So it has to, you need a valid work authorization. And that has caused a lot of confusion in our offices, including, are you immigration? Don't check. I'm telling you, it's a good number. I paid good money for this number.
And that's, many people, when they say we're not immigration, well, you're not an IRS agent either. And it's, so here's the thing. In a lot of people, I've gotten hundreds or probably thousands of messages through social media, and they claim, if I had read the provision 32N, which governs the SSN requirements on EIC, and 24H7, which governs the SSN requirements on the child tax credit. And yes, we have read it. And I know that in reality, those provisions, they say that it's to be issued before the deadline. And then obviously they added including extensions. But now we have to do a two-layer test. So now we have to make sure that the Social Security card has been issued before the deadline, and then we are also required to ask if the actual work permit is still valid at the time of filing, which we're gonna go over as far as that. I guess the timing issue is like valid since when? Since December of 31st, 2025. Did it expire in August? Is it valid at the time of the filing? So we're going to go into some recommendations about how to approach these situations. My permit was valid up to 31st of December, 2025. Do I qualify for this credit? It's when did it expire? But the thing is that how I'm recommending is pretty much at the time of filing. Is your work permit valid?
So let's go to the color scheme, right? And for all of you, John has circulated an article that has all of the statutes and all of the rules in there. And I tried to make it as easy to understand so that anyone who challenges you, you have all of the legal support for the position that you're taking. Look, I wish I could have written something that said the other way around, that, hey, these old Social Security numbers and these Social Security cards are fine, or adopt the construction that some of these so-called preparers are advancing. But we have painstakingly gone through the statutes and the advice. So not every Social Security number is created equal, right? There's the normal Social Security number that is unrestricted as to the ability to work, right? That, of course, you could take the credits. There isn't a limitation, right? Then there are the Social Security numbers, the ones that are causing the most stress in terms of due diligence and what we need to do and what we don't need to do. Is it restricted to work, but it allows work as long as it is authorized on the date you sign the return. That's why people are saying, hey, get the extension. As long as it's valid on the day you sign the return as extended, you're golden. And then there are those Social Security cards that say not valid for work, right? The not valid for work does not get you the credit. Just because you have the number, just because you have the card, does not mean you qualify for the refundable credit. In fact, it means under OBBBA that you do not qualify for the credit. All right. I probably went to, so you want to go through the green, the yellow, the red, what they mean? So what's the green card mean? What's green? Now, we picked a bad color for that slide, right?
Jason, you want to go over it?
Be my guest. You go ahead, Ruben. You can.
Okay. Yeah, so the green line, unrestricted, means it doesn't really have a legend. You're talking about a U.S. citizen, a green card holder, and the work permit obviously is not really in question. You have a U.S. citizen, you have a social security number, and you qualify for the credits. And but remember, we're talking about the taxpayer. Okay, the parents. At least one of them has to have either a valid work permit or an unrestricted card. Now, for EITC purposes, both parents have to have it, right? So we need to make sure that we are asking the right questions in order for us to be awarding some of these credits, because I know Jason's going to cover the due diligence aspect, but we're supposed to be knowledgeable of what questions to ask. We're supposed to be informed of the requirements of each credit. So that's the green. The green light is it's a cool color. We don't have to do much of the questioning when it comes to the work permit. You want to go to the next one?
Let's go to the other end. Red light.
Extreme to extreme. Red light. A red light means practically it was a Social Security number that was awarded just to get some type of federal benefit, but it doesn't allow the individual to work legally within the United States. So generally, for these individuals, if they're a qualifying relative after doing the test, qualifying relative or qualifying child, you may qualify for the other dependent credit, but it does not allow you to claim the child tax credit, neither the EITC.
Right. So, and these are the ones that you hear new legislation coming out for. Right now, it would be Social Security for non-work benefits like Medicaid. They may have all new rules next year about these cards. Then the yellow.
The fun one.
All right.
Okay.
The one that is causing all of the problems in the office.
This one is giving us plenty of fun time. Okay, this one is a complicated one. All right. This is where we have to verify that not just they have a Social Security that is issued prior to the deadline, including extensions. The second test we also have to do, that we have to carry out, is that they have a valid permit at the time of filing the return. I know that I have gotten numerous questions about what happens if it's expired on December 31st? What happens if it's expired in August? What we recommend, since there's really not a clear guidance, is at the time of filing at this time. And remember that what we're trying to do here is we're trying to provide recommendations. Well, one, for you not to be penalized as a preparer for awarding a credit that they may not qualify. And then second, a credit that we can actually defend. So that is something, that's why we're giving these recommendations. Now, for this, these individuals, you know, there it is, it's a still valid rule, you know, and it has to have the work permit has to be valid at the time of the filing of the return. Now, there's also a time where they apply for renewal. During that time, they may qualify because the work permit remains eligible to work during that time of the renewal. So if the permit has been expired, like for instance, if they didn't renew and it's expired when they come into your office, then it's technically an invalid SSN, an invalid SSN. So here's some scenarios that we have. You want to go over them, Frank?
Yeah. Okay, we can go over them. These are hard questions. So we tried to put in these slides some examples, right? You had a DACA recipient, right? And their work authorization filed September of 2024, okay? Now, you go in later, it was invalid for 2025. So that is no credit. On the other hand, if it's pending renewal, then there is a 180-day automatic extension that applies. And that means if you're in a valid extension period, then it is a good SSN for purposes of taking the credit. Okay, so that's an important scenario, what we call the yellow light scenarios that are in the article and in the rest of these slides. So you should take the slides because we tried to make sure that you had real examples. All right. So now it's pending renewal. What are we going to do? You're waiting for the new number. File the extension because it's going to push that date. Right. And I think everyone is uniform is, you know, if you're pending and we're going to get the green card, don't file the return in April. You're going to make, but I don't want to wait for my refund, they tell you. But how about you don't wait? If you're not waiting for your refund, then you don't get it. Then, or you get an audit as a result of it. How much worse is that? Wait until the paperwork clears. Then you'll get your money. And I know nobody wants to wait for their money, but you don't. And look, a lot of preparers, you don't want to wait because how many things do you want to extend until October, right? Does tax season ever end? So, and then maybe you don't get paid till they get their money. So there's a whole bunch of reasons, but you got to file the extension. All right. Anybody else want to say anything on the extension strategy? You got to file.
On the extension strategy, if there's any questions, you guys are welcome to ask. But I do want to take a step back real quick because there's a lot of people that are saying that people are continuing to claim this credit. And the IRS is issuing potentially a refund. Remember that we have a voluntary tax system, and that does not mean that if you feel like filing the return, then file it, and that doesn't mean that you don't have to. It means that, hey, calculate your correct tax, and then the IRS, will check to ensure, that the Social Security matches, that it doesn't have any clear indicators of that the return being off. And they will probably issue a refund. Remember that the assessment statute expiration date, which is 3 years, they have that to audit that return. It does not mean, a lot of people believe that just because they issue the refund or it means that, the return was accepted, it does not mean that the return is substantially correct. It just matched, the information matched. So that is kind of one of the things where I did want to add, because there's a lot of people that don't understand why some people are going to some preparers and issuing, and the IRS may be issuing the refund, and then they come to our office and they say, well, you don't qualify. Well, remember that this has happened. This is not the first time this has happened. There's been a lot of fictitious credits sometimes that are claimed. Sometimes they issue the refunds and then they go through a full examination and now they may call back that credit. So that's kind of one of the things where we must understand that even though the refund has been issued, it doesn't mean that it's correct. They don't verify the return itself.
No, the IRS computer is geared to get these refunds out as fast as possible. Why? It does move the economy. When people don't get their refunds, it's one of the most frequent calls to elected representatives, and they pressure the IRS to send out these the refunds, and they also pressure the IRS to send out letters saying you forgot to claim the refund and you may be entitled to. And those letters cause more trouble than they're ever worth. But there's a political reason they do it, and then we as preparers, professionals, have to clean up the mess that those letters make. All right. So let's go through. Let's find out, why do we want to clean up the mess? This is Jason's area of expertise. Why do we want to clean up? You know, they got the refund. It's done. We never have to worry about this ever again. We just close up our office, we go, and we open up next year. Not the way it works, Jason.
That's exactly how it works. That's exactly how it works. I can say this. When we get into due diligence, it's very important that everyone watching this understand that when a due diligence audit happens or a due diligence visit happens, they don't go back in time. So any upcoming due diligence visit that's happening today is for the 2024 tax returns, meaning any due diligence issue on this topic will be for the tax returns that are being filed today for next year. So next year, God forbid somebody's in a due diligence audit, it would be on these tax returns that we are preparing today or that we prepared this year so far. So I'm saying that to say all of these Social Security cards, there's a lot of people that collect Social Security cards from their clients. Now would be the time to double check what you've done this year so far. I'm talking today, yesterday, last month. Because due diligence has to be done contemporaneously, meaning at or around the time of tax prep. Right now is considered contemporaneously. So I would go back right now and double check and look at these Social Security cards, make sure that they say or valid for work authorization, or more importantly, what they don't say, what it could say not valid for work authorization. But my key thing from a due diligence standpoint is it's very important to double check what you've done this year so far, while it's still fresh and while you can still reach out to taxpayers or whatever you may need to do, because once this gets into next year, then you'll be going back in time to today trying to correct things, which is a violation because it's no longer contemporaneous. I hope that makes sense.
Yeah. Look, everyone, we have too much stress on this due diligence, but it is real, and it's going to become more real. I've got more than a few return preparers who the civil audit has become a criminal audit one, because the volume of wrong or incorrect credits. And it's going to get worse now because you're now going to be able to make these fraud referrals on the internet or over the phone. So it's going to be easier for a taxpayer who feels that their taxpayer was the person who got them the credit, and now that they have to give it back, to say, this is all my preparer's fault. And that's what we have right now. I'm handling a case right now. It's become a criminal case where the defense by all the taxpayers who, when they wanted the credit, just begged this preparer, I need this money. I can't live without this money. Now they're saying it was all her idea. And it's unfair that the government is coming after the taxpayers to repay this money. The preparer should pay back this money, and or the preparer should go to jail. And they opened up a criminal investigation when it's pretty clear from the interviews of the preparers in the office that have done these taxpayers' returns over the years, that they were there January 1st saying, why can't I have my refund tomorrow?
Hey, can I interject one thing here? The penalty is actually $650. It went up in January. I put the news release up on the top, sticky there in yellow.
Yep, my bad. I didn't.
No. The slides weren't updated. It was only, but that's new. It's going to go to $650 for any audits this year. So, yeah.
Mm-hmm.
I do want to add one thing about, please, every preparer that is, well, first of all, we know we need a PTIN, right? Please, we need a PTIN. And then second, you have to familiarize yourself with the requirements of each credit. I have had numerous, and I'm sure Jason has had a lot more, but right, we ask, have you recorded all the questions whenever they call you that they've been selected for, I don't know, a due diligence audit? And then the first thing that they respond back, it's like, what questions? That's the problem. It's like, have you asked the questions? What questions? Good God. You see, that's the beginning of a lot of these problems. You have to ask the questions. You have to record the questions. You have to record the answers contemporaneously. The third requirement on the Treasury regulation, knowledge. And he's going to go and explain a lot better than I am. But it is very important for you to be familiar. Like, for instance, now we need to be asking whether you have a valid work permit. Okay, we need to verify, and that needs to be recorded in order for us to meet the due diligence requirements. Go ahead, Frank.
All right, now, so the next thing is, so we've delivered some bad news, and now we're going to get you ready to deliver next year's bad news before it happens. All right, so that next year their government's even going to be tougher on these refundable credits. So, and that is going to mean that people who are going to get it this year, that they have to be ready to know that next year they may not be entitled to any of these refundable credits. Basically, DACA, TPS, H-1B, they're all going to be out next year for these refundable credits. So people should plan their withholding and their income appropriately, right? There are people who are making their life thinking, I don't need to pay and I will not need to pay a tax because the credits wipe out that tax. Those credits will not be available next year. So in addition to telling people they're not getting their refund, you may have to tell people they need to adjust their withholding because they're going to owe some tax next year. So that's, I guess, the other point of bad news that we have. All right, so that's really the first part of it. That's the education part of what is going on. We need to talk to our clients and ascertain their status, and we're going to have to tell them there's a lot of people who, if they don't have a valid work authorization, they're not going to get the credit. That we've got to tell preparers that if they can't just take a shot and say, hey, what's the audit rate anyway? Because the computers are going to match this up. And they have a 3-year statute of limitations. And that 3-year statute of limitations is going to come back with penalties. And by the way, there is some litigation going on whether or not the 3-year statute of limitation applies to a preparer, whether for many of these penalties, it's an unlimited statute of limitations.
I do want to mention one thing on one of the groups. The notice that they may qualify for the credit was posted redacted, and there was some practitioners that say, well, you know what, just respond to the letter following the proper schedules, and if you get the money, you get the money. I invite you to visit Circular 230. If you know that they don't qualify, why in the world would you recommend to claim it? And remember that they have 3 years, like Frank says. And I mean, he talked about the litigation aspect, but they have 3 years to be able to claw back technically that amount of money. So us as Circular 230 practitioners, I could never recommend, if I clearly know that they don't qualify, why not just take the time to explain the requirements, and also that the IRS system only really checks for the validity of the social security number of the time of issue. Was it issued before the due date of the return? It doesn't check for the valid work permit in real time. That is the questions that we have to determine at the time of filing the return.
You know, to Ruben's point, we saw all of our non-resident alien clients who were not entitled to the rebate recovery credit, and we didn't claim it. Treasury mailed out 1 million rebate recovery checks in January of 2025, according to all my non-resident alien clients. We told them mail it back. A bunch of them didn't cash the check. Guess what they got? Hi, we gave you that money in error. Please give it back. So they sure can and sure do eventually catch their mistakes and come back looking for that money. On the $1,400, they're not looking for interest and penalty, but on these credits, they sure will be.
Yeah, I see it, and Jason's seeing it from the audits that happen afterwards. I'm seeing it for you in a way where Ruben says he wants to take you to see Circular 230. I want to take a road trip to Club Fed and see how many return preparers are actually there. I want you to look at the United States Attorney's website and see the percentage of return preparers in the income challenged area that are being targeted out for prosecution, and the number of agreements that you end up signing, where in these criminal cases, the standard part of the agreement is that you agree to a lifetime ban of preparing returns for money. So even if you don't get jail time, you will sometimes be out of your profession and have to close your place. So there's real jail time, and you look at these things, then there's lifetime bans, there's other penalties. And if you look at what the U.S. Attorney's offices are doing and the tax cases that we're seeing now, there are more of these cases that have an immigration issue than ever before, right? That they think that we as tax professionals are looking the other way towards immigration violations. And they're taking what we do as aiding and abetting violations of the immigration law, as opposed to what we try to explain to them is we're historians. They come in, they admit they've earned income. Maybe they needed a work authorization that they didn't have. But what's our choice? Not to put the income on the return? We're historians. They earned the income already. We didn't say go to work. But once they did go to work, we have to report that money. But you'll see that is, in many of these prosecutions, where we start getting into trouble. So that's why the second piece here is the burden, right? The due diligence, the burden. What do we have to do? Because it's not just the taxpayer's name that's on those returns. It's the preparer's name under penalties of perjury. So now it makes and creates a legal obligation on the preparer. Okay. So, what does the code tell you? We have these due diligence requirements. I mean, Jason's going to tell you what's real and what's not, because there's lots of fiction about what those due diligence requirements are. But once you know that they're there for the EITC, they're there for the CTC, they're there for the ACTC. I mean, going to be there, and there's lots of money that follows these. And you can't be willfully blind, because if the IRS determines you know or have reason to know, they will impose the penalty. And then the burden of proof, you have to prove that you didn't have reason to know as the preparer in the civil case, right? In the criminal case, they still have to get reason to know, and they basically say, follow the money. You did it for the money. And they'll look at what percentage of your practice includes claims. In many of these audits, they will audit every single CTC claim or EITC claim to see, is there a pattern of overstatement or claiming credits that are not entitled. All right. And again, John told you the 635 is now 650. That's more than some of you are charging for the returns, which is a heartbreak, because you should at least get enough money to pay your lawyer. And they're going to be assessed based on the money, even if the taxpayer didn't collect the money, right, and it was stopped, or because you didn't do a lot of due diligence. And there is no maximum cap on these penalties. So if you have a busy practice, this could wipe you out. And then the even scarier thing is we've seen on some of these big audits, statistical samples. So they'll look at 100 returns. They'll say that 40% of your returns have the error, and then they'll go assess the penalty against 40% of your total returns. And then you have to go to appeals or tax court and say that the IRS statistical sampling was wrong. And I've seen $3 and $4 million penalties based on the IRS's use of AI and statistical sampling. Right. What is next? Let's see. So the multiplier effect. Is the $635 penalty limited to one per return, Jason?
Not at all. It's per violation per return. So you're looking at a maximum of 4 violations per return.
So I could be charged $2,540. But what if I only got $500 for that return? There's a cap, right, of how much I got. Isn't there? It's not only fair.
You're out of luck there. You're out of luck.
I could pay more than I paid.
Happens all the time, unfortunately.
Wait, it could be worse. What if I own a business and I employ one of you guys, and you guys make the mistakes or get the penalty? I can also be penalized under Section 10.36, the brother's keeper rules. My failure to have a system in place to make sure you don't make these due diligence errors. So if you have a business with employees, these penalties can double.
Okay, so how are we going to avoid these penalties? All right. Again,
I heard that you have to get a DNA test, Jason. In urine analysis, according to a lot of the Facebook posts.
You know, I actually had to try a dependency case where the issue was the father the biological father, because the husband and wife were not married. And so I figured, you know, this is easy. We just put the wife on the stand, and, you know, common law wife on the stand. We'll just say that they've been together for 15 years. There was nobody else. And I didn't think we were going to have to actually go through with the DNA test. I didn't think the judge would order the DNA test. And what did the woman say? We asked, the government asked the question, you know, like, you were married. Yeah. Did you sleep with anybody else within 9 months of marriage? So I got, the father is there, and the kid is 15 at this point. The mother says on the stand, you know, I was doing a lot of drugs in those years, so I don't really remember. And the judge made us go through with the DNA test. We didn't meet our burden of proof. But you see, so there in some cases, there's nothing you're going to do to get out of, like, how the government will push these cases until like the edge of the envelope, right? So we've given you the 4 pillars of due diligence, right? And again, I'll just go through them and then Jason will explain them, right? That Form 8867, you got to do that up front, right? Don't be looking to backdate it the day before the auditor got in there. Or copy the same one and put it in 300 files. Complete the computations. And again, they better be different for every client. Satisfy the knowledge requirement. All right. We can use Google Notebook and you educate because you got to answer these questions, right? And then you meet the record retention rules, which we keep calling them strict. They're not as strict as the IRS tells you they are, but they're not as easy as somebody who says, oh, just like if you have a yellow sticky note, that's enough. So Jason, take us through the 4 pillars if you want, right? How important is this stupid 8867?
Well, it's pretty important. I would say it's extremely important. With software, it becomes less important because most people, I'm going to say 99.999% of everyone is electronically filing. And I'm sure anybody that's prepared any return recently knows if you miss one box on the 8867, it's rejected. It won't go. You can't get the green light. So it's getting more and more difficult to not complete the 8867. However, it does happen, and it does happen to be completed incorrectly at times. If you actually read the 8867, a lot of it will help you do your due diligence. In fact, I believe it's the second page of the 8867, somewhere near the end, it actually tells you exactly what you need to do to meet your due diligence requirement right on the form. God bless you. So the 8867 is really important. Just same with pillar number 2, requirement number 2 is the computation of the credits. Software handles most of that. Unless somebody's doing something by hand.
The software sometimes gives us a number that's too low. So can't we just override that? Maximum credit? You don't do that? That's how I was taught. You must have unhappy clients.
Hey, Frank, was this one of your preparer cases or someone else? They did like 800 returns in TurboTax, so there was no 8867 because software in the retail market doesn't collect the 8867.
We've got, all right, so, and I was going to say, there's preparers, and then there's the real world of ghost preparers, all right? They can buy one copy of TurboTax and do 800 returns, right? Why pay TurboTax all that money? Yes, and then not everything is going to generate for purposes of due diligence. That whole ghost prepare area, it's another thing. People who are coming to this event and getting the 1 hour of CLE and trying to stay on top, you're not the ghosts, right? But it is, every year I make a good deal of money from tax preparers who, when we do the interviews of the clients, they'll say there was one price for a return where the tax preparer signs it and the refund is lower. And then there's another price for a return where the tax preparer doesn't sign it, but the refund is much higher. And the clients choose the much higher refund where the taxpayer doesn't sign. And then they're all upset when they can't use the defense of, but I relied on my preparer, right? There's a lot of ghost preparers. New York State is especially using a lot of resources to go after the ghost preparers. One of the common areas is to either use a software program that's designed for DIY use and then use it 100 times.
I do want to add, because Jason, when you said the 8867, there's a lot of people that have to mail in their return because of their ITINs. I'll make sure that you attach the 8867s when you're mailing in the return, and it's either a head of household or you got a situation where you're giving the other dependent credit. Because I have seen a lot of preparers come to us that they got a notice from the IRS that they're not attaching the 8867 because they have to print that out. So that's kind of like a heads up for a lot of the people that are sending ITIN applications. You have to attach the 8867.
Okay.
Hey, real quick, we're going to finish this program, I think, everybody. But if you're watching it live, you have the 50 minutes in. If you answered 3 of the 4 polling questions, you need to go. You can go. You've earned your credit. 50 minutes and 3 of the 4 questions. So we're over the 50 minutes, but we're going to keep going, and then we're going to do the Q&A. Sorry, guys. So,
Jason, what's this whole knowledge requirement? What do I got to know? The whole Internal Revenue Code?
I can tell you this: 90% of all penalties, and that's just not a number I'm making up. It's from my experience, but it's also what the IRS says. 90% of all due diligence penalties come from the knowledge requirement or failure to meet the knowledge requirement. This is a big one. I know, Ruben, earlier you said about asking the questions. There's one word that we have to throw in there is relevant. We have to ask relevant questions. I've noticed a lot of preparers will just ask questions. I 40, 50, 60 questions. I'm like, how do you ever finish a return if you're sitting here asking all these questions and maybe 1 or 2 of the questions make sense, right? They just got drilled into them that I need to ask questions. I need to ask questions. That's one end of the spectrum, right? You have the other end of the spectrum where nobody's asking no questions. And then you have the other end where people are asking a million questions, but they're not relevant questions. So it's very important to ask relevant questions. In case in point for this particular topic, we do have to ask, do you have a valid work permit or work authorization or something like that, something along those lines, and get an answer that makes sense. Some people are going to say a best practice is to actually collect and rely on and make a photocopy of the Social Security card, things like that. That may be a best practice. It is not a requirement. I'm big on that word requirement because, again, I do a lot of due diligence audits, and you get penalized for not meeting the requirement. You don't get penalized for not doing what's best. Okay, sometimes you of course you would like to do what's best, but if a best practice is called a best practice for a reason. So we have to, during the knowledge requirement, the pillar number 3, you do have to not only ask the question, you have to ask the relevant question. And you must document it. You must document your questions. Plenty of people will say, oh, I asked, I just didn't write it down. Well, then that's not due diligence, right? You have to have the questions and the answers documented, and all of that becomes part of pillar 4, the record. So your notes, your documentation of any documentation that you may have collected by your choice, you may have collected, you may have relied on, along with your notes, your questions, your answers, all of that becomes part of the record, and it is now that is what is kept as far as record retention, which would be pillar number 4.
All right. So, all right. So let's go to, I guess, the next question, which is more of what I end up doing in court all the time. The IRS says my people haven't made reasonable inquiries, right? And I end up telling a jury, we're not auditors, right? what we do is we translate information from English into tax and put the right numbers in a box based on the information that the taxpayer gives us. Right? We are not there to do a forensic audit. Right? That's why the IRS is there. We are not there to act as immigration officers and to say, oh, they worked without a valid work authorization. We are calling immigration. We are calling Social Security. We are, and we signed a return covering that up. I actually had somebody tell one of my clients that he was signing returns for people with ITINs that were working illegally. It was part of a big cover up. And I'm like, and again, then you go back into the historian point of view. I mean, what did you want us to do? Tell them, oh, we can't report that tax. Take the Fifth Amendment, because now that I know, which is like, that's the logical extension of what the government's argument is, right? That our people, instead of asking the questions, should give them their Miranda warnings, saying that anything you tell me will and shall be used against you by the IRS. That isn't what it is. We as professionals don't give Miranda warnings, right? Sometimes we should, but we don't give Miranda warnings. We basically are signing a jury that says it's true and correct as to every material, right? Not that we've gone through. So what are we? We're not allowed to ignore obvious problems. So if something is incorrect, inconsistent, or incomplete, where someone tells us that they weren't working, but you see that they got a W-2 in another number that they purchased or borrowed. We can't lie about their status. We can't lie about, that we aren't living, you don't have a husband and wife living in the same household, right? That we can't lie. Even the address on the return, we can't do like a married filing separate or two single. The most common one where I see people get in trouble is someone does a husband and a wife and decides that they're both going to be single and both take the credit. They just use different addresses.
Okay.
Or get a Social Security number that's one digit off. How will they know? Or those are the things that get you in trouble. And they get you in trouble because once is a mistake, twice is a coincidence, 3 times is a pattern. When you are changing the numbers on K1s, on more than one K1, for more than one client, to understate the K1 income and say, oh, the K1 that we got had the lower number. Then if there's a pattern of it, then you have violated. So really what they're looking at is you can't lie. Right? The taxpayer tells you something, and it's a reasonable person would believe what the taxpayer said. Then you've met the reasonable inquiry standards. You've asked the question. They've answered the question. You've documented their answer to the question. That's it. All right. You're not going to the home and saying, I want to see the kid's bedroom. Does he really live here? And you know what happened. So those of you who come to the calendar call with me, how does the IRS check if the kid really lives there? They go on Facebook and they look at the kid's room. So I'm not even saying you got to do that. Right. But you have to act like a professional. All right. And then the next slide is some of the red flags. If again, the Social Security card that says work only with DHS authorization, and they tell you that they have no EADs. Right? So, I mean, that should say, wait a second, how can you be working if you don't have an employment authorization document? So that may warrant asking another question here. Right? And that's because you're ignoring the implementation, right? If they told you that they don't have current employment authorization, you may have asked enough and to put it in your file. They may not, look, there's going to be computer matching on this stuff, but that may be enough to avoid the penalty.
And that's the thing, back to the knowledge requirement. If you actually read the third requirement, right, the preparer must continue to ask questions until the information is correct, consistent, and complete. If you haven't asked about the work authorization, then you have incomplete information right now. So you cannot proceed, okay? So you need to make sure that you ask.
No, and that's the next point, right? So one is asking the question and getting a lie back, but it's not obvious. You've done your due diligence because you're not the forensic auditor. On the other hand, never asking the question, then you haven't done your due diligence, right? Not having a file. And the explanation is, you know, the explanation everybody gives me now is, Frank, we've gone paperless. All right. So that helps me. There's nothing in that little computer. A question never asked, never happened. All right. So you need to, in some way, meet your burden of proving that you conducted the due diligence. You know what's the best thing? That you make some notes and you keep them. That chicken scratch, contemporaneous chicken scratch, is good. It means you asked the questions. You got the answers. Having a form that you just quickly fill out or your staff quickly fills out and that you do it the same way all the time. That's great because it shows a pattern. And so if we have one file that's not perfect, but we have lots of files that are done right, there's a spillover effect. So that's, remember to, you got to ask the questions. And ask, you got to ask the questions, right? You can't put your head in the sand because there's a lot. I don't know if you, again, you see these at the calendar call, you see these in the pro se taxpayers. There are these bands, right? There's some taxpayers who went to bad preparers, and they're on a 2-year ban list or a 10-year ban list, right? And they have these letters advising that they're on that ban list. They can't take the credit. But there are some preparers who feel blindsided. They say, you know, they never asked the question, and then you got these examinations that start because you claimed the credit for someone who's on the banned list already, right? And these ban lists, I mean, are bigger than you think they are in some neighborhoods. So you always need to have in your organizer the question of, you know, have they received any correspondence about their ability to claim these credits? And, you know, if they lie to you, that's fine, right? You're not supposed, you don't need to do a FOIA on every taxpayer that you do. No, there are some examiners, like, did you ever think to check? You know, you don't even know what an 8821 is. You could have just gone in the internet and you would have gotten that answer from the IRS right away. But instead, you let them steal our money. Why? Because you were getting paid with them to steal our money? There's no obligation to do that for you. Even if they say, oh, but you could have gotten that information by just filing the 8821. That's not what Circular 230 requires. You ask the question. You live with the answer they give.
As long as it makes sense.
As long
as the answer
as
makes
it
sense.
makes sense. And again, you should, if you are not familiar with it, learn about the 2-year ban and the 10-year ban, because preparing more than a few returns for people on the 10-year ban is a pattern, right? Especially you got all, you know that a preparer has a lot of clients that was on the 10-year ban, and then you pick up a big piece of his prior returns because he's moved out of the area, or God forbid you paid for that list of taxpayers to do their returns. That's a problem. So what else do we have?
And by the way, I do want to comment on one thing. People continue to ask in the chat, and obviously I get direct messages all the time. Ruben, can you please just give me the questions that I have to ask, and I'll just fill that out, and then we're done? No, I can't. Why? Because I don't know what your client is going to tell you. I don't have a crystal ball that is going to say, oh, this taxpayer is going to respond this, and that, and then we're done. We can give you, I mean, you can have like certain questions, but again, they have to be, depending on what they answer, right? Then you're going to have to ask follow-up questions. Like, I don't know, let's just say you're trying to verify, the expenses, and you see all rounded numbers, and obviously that return is going to qualify for EITC, and you see that the gross income is just $20,000 on a sheet of paper. They wrote in a little square of toilet paper, charming toilet paper. All right, and they give it to you, $20,000. It's round. How did you, just ask? How did you come up with this number? Oh, I just guessed, or I added my deposits. Well, did you deposit all that money in your bank account? I mean, it's just kind of like, things that you have to ask. And we cannot give a manufactured list of all the questions because it's all going to depend on what they ask. What they answer.
And basically, what Ruben is saying is we have to assess the information and ask questions based on the information that we are receiving. So there's not going to be. I get the same thing you get, Ruben. That people say, well, what questions should I ask? I've even seen people selling questions. Like, I got a notebook full of questions. Here's your due diligence questions. And that's virtually impossible to do, right? Because you have to assess the information. If I'm talking to a truck driver, I might ask certain questions. But if this truck driver is blind, now I'm going to ask some different questions, right? Like, how are you a truck driver and you're blind, right? So it's just based on the information that's provided. That's where your questions got to come from, from the information that is assessed. And that's actually what Congress and the IRS wants us to do. They want us to use our brains, right? Our common sense, assess information, and ask appropriate questions.
But look, I get the same thing from clients at every part of this phase. And what I remind everyone is begin with the end in sight. At the end of this process, if you screw up, is a trial, right? If I'm asking questions, do I go into that trial with a notebook from the questions I asked at the last trial? And is that going to get you off? Is the jury going to want to know about last month's trial? Or does the jury want to evaluate the person that's there in front of them now? Okay, that's why you got to ask questions and listen to the answers and ask follow-up questions, because it's the search for the truth. You think it doesn't seem as important as it ends up being when you go at a trial. But that 5 minutes becomes crucially important when you go to a trial, right? And so every time you sign one of these credit returns, you say to yourself, did I do everything that I don't have to go to trial? I love Frank, but I don't want to spend, the next 2 weeks of my life in a courtroom and have 12 men and women that I don't know judging whether or not I stay free. Okay. And again, this year was the year of the return preparer cases. And the fact in every one of the cases is, my case is always follow the money. My guy got $150 to prepare the return. The client got $6,000. Where do you think the blame should lie? But juries, they think if they paid, that person paid something. Why isn't the accountant standing behind the return? He should pay the tax. And by the way, in most of these cases now, the last set of cases, I have this preparer in the Bronx, this poor woman, right? I think she made about $1.50 from the preparation of these returns, but the government was out $800,000. Her fine, not in addition to the potential jail time, was to pay all of her client's taxes. That's called restitution.
Wow.
So she made $150. She's got to pay out. It's going to take her the rest of her life, $800,000, because that's what the government said, false credits that were paid out because she didn't do the due diligence. And then when we did, so we had to go back and try to forensically audit it. A lot of her clients, I'd say half of them, would probably be entitled to the credit anyway. It's just that her and her staff were so sloppy with the record retention and the due diligence, we couldn't prove it. So the answer is, oh, they're good people. They'd probably be entitled to it. Do you want to pay the tax for them? Because that is a possible outcome of screwing up the record retention part, where you think that, oh, this is stupid. Why do I have to keep all this paperwork? Right. So that's the 3-year clock. The next slide, that this 3-year clock, that could mean the difference between you paying the client's tax, you being subject to malpractice, and not, right? I think that one of the articles I wrote this year was about the trend of courts and malpractice insurers coming in whenever the IRS, whenever a taxpayer gets a notice that they got to pay something back, that there is this cottage industry of young lawyers who are just suing the preparers to try to get the preparer to pay the client's tax. So keep those records. And then I don't want to be all gloom and doom, but the next slide is even worse. So in addition to the penalty, right, the $635, which is now $650, there's other penalties, right? So the government can stack penalties, and willful penalties. They start at 1,000, but if you're willful, right, and it's always somebody in your staff is going to say she knew better, right? The conversation is, one of my clients was the IRS did. They do undercovers, by the way, on the credits. They come in and make believe that they're clients. And we have one client in South Jersey who.
No, not South Jersey. Not South Jersey,
right?
South Jersey would never.
Say, Jason, Oklahoma, who is it? They came in, and this attractive young woman was going after my client and saying, I need the money so much this year. I beg you, if you do it just this year for me, I'll never do it again. And she was an attractive, flirtatious young woman. And he did it. He signed a return that she wasn't entitled to credit, and she's on tape saying she's not entitled to it. I know I'm not entitled to it, but can you help me out? The next day they did the search warrant. She was an undercover special agent. So sometimes even the IRS is trying to find what they could get bad preparers, and entrapment isn't really a good defense, right? The fact that she was begging and she made the right statements on the tape, right? She knew that she's not entitled to it. She got him to agree. She wasn't entitled to it, but we'll only do it this year. I'm begging you. So that's the conspiracy to steal from the United States. Okay. I think we're getting the hook now, guys. I'm sorry to talk so much.
Yeah, I do want to, I know the webinar's over, but I did want to add one thing when it comes to the penalties, because I frequently do Facebook Lives, and I was told recently, which I kind of want to bring this up now that you talk about penalties, Frank. You know what they said to me? They said, Ruben, it appears that every time you go live, you're just trying to build that fear within the tax preparer community about penalties. And I'm like, I would have so much fear not knowing that I could be penalized for doing all these things wrong, and then I get selected for audit. And it's like, it's not about, I'm trying to create fear within the community, is that the tax preparer must be informed that if you're trying to do things, if they already told you that they don't qualify, you understand the requirements, but yet, there you go, you're claiming this credit, you're trying to, go around and help, in quotation marks, help the client or help yourself, then you are going to be penalized. And it's important to understand that it's not that I'm trying to create fear within the Hispanic or Latin community sometimes, which I've been told that many times. I said, no, I'm trying to have a Latin American community that's well informed of these penalties and the consequences of what happens when you are claiming something that you're not supposed to.
Yeah.
The consequences of giving Ruben the microphone. This was voted up 3 times by people. So 4 people are agreeing with this. I wish the IRS wouldn't send taxpayers letters saying they qualify for the EIC, the CTC, because after we've determined they don't qualify for it, they start kicking and screaming at us. I reminded somebody on if you guys want to comment here, I reminded somebody on social media they are the most intelligent tax preparer in that conversation between them and their client. And you need to be patient and you need to explain it. And just IRS sends notices that are wrong both ways. But if you guys want to comment to this.
I'll go ahead, Fred.
I wish they didn't send them either, right? But they're sending the letters from a good place to make sure that taxpayers know that there's money available for their children. And because of that, that's why they send the letters. So the burden that it puts on us, which is annoying, right? And especially when you have these now ChatGPT people coming in and telling me that they're entitled to this credit and they got this letter from the IRS, or at least why don't you take a shot? I would get frustrated, but that is our
university.
We're tax professionals. We have the same duty as the IRS. The mission is to educate America's taxpayers as to their rights and obligations. So part of what we do is educate. And then on Ruben's point, is why do we scare them? I mean, I don't want to scare anybody. Look, my first boss said, don't tell people not to do crime because we make more money when they do the crime. It's a lot more look. My average criminal defense of a return preparer is now between $500,000 and $1 million, right? So I'm like the chemo. I mean, you're taking it because now you've got the cancer, and getting cured is not going to be without a difficult cost. But over the years, right, having seen friends and family go to jail, the American dream is to go out, to use your knowledge, to get respect, to build a business, to become a member of the community, and hopefully people won't try to deport us all day, right? And so part of that and getting the respect is providing true knowledge, not how to get over on the system that we want to become part of. We want our small businesses to do well by following the rules, so that they can get finance, that they can grow, that they can go public. I've represented some people over the years, right, that they were really on the balls of their ass. The IRS was going to close them down for owing money. And then some of these people now have $40 million apartments on Central Park West, right? The thing that makes you proud as a tax professional is you help guide people through really complicated rules and let them excel about the things that they do in their business that makes money honestly, and that they're going to do well and you're going to do well. So yes, we have to, the same way we tell a kid, don't touch a hot stove, don't jump into traffic. We tell our clients, don't commit fraud.
Okay, Vanessa's comment, which got 2 additional votes. So to meet our Jason, this is for you. So to meet our due diligence, do we need to keep a copy of the social security number and work permit? Or are our questions enough?
I can't wait for your answer.
It's a very, very nuanced question here. So to meet due diligence, relevant questions and appropriate answers is enough. It's very important that I reiterate the word relevant questions. Now, by all means, you can get a copy of the Social Security card. I just have to state it is not a requirement to actually have a copy of the Social Security card. I stress that a lot because you're going to get revenue agents that says it is a requirement. Like I said, I just had that this morning in a due diligence audit where they just kept saying it's a requirement. You can look on the IRS website right now, and there's parts of the IRS website where it says Social Security cards are not a requirement from a preparer standpoint. So to answer the question, the relevant questions along with relevant answers is enough to meet the due diligence requirement. You are not wrong if you want to collect the Social Security card. What I do caution you though, if you do decide to collect Social Security cards, birth certificates, whatever it may be, you have to really analyze these documents and make sure there's nothing else on there that may create new inconsistencies. We had, and this has nothing to do with Social Security cards, but I did have somebody who was just collecting birth certificates, and come to find out the father's name wasn't even on the birth certificate. He just had birth certificates, and the father was claiming the child as a dependent. He just knew in his head, I'm going to collect birth certificates. So he didn't really analyze the birth certificates that he was collecting. So I'm saying that that's the same thing with the Social Security cards. If you do decide to collect a Social Security card and do decide to rely on that information on the Social Security card, really, really look at it. Don't just say, okay, I got a Social Security card, I'm good. Take a good look at it. But again, to answer the question, your relevant questions and your relevant answers would be enough to satisfy due diligence.
Thanks, Jason. So if you ask, is your work authorization valid? And the answer is yes, then you're okay. The question is, if I don't see any other indication that he's not telling the truth, is that all I need to do is ask the question? Or do I need to see it? And then separately, do I need to save it? Frank or Ruben, what do you think?
You see, again, that's where I'm going to disagree with my brethren at the IRS. I think that if you ask the right question, which is, do you have a valid work authorization? And the client tells you yes, and there are no other indications that they wouldn't, then that should free you from any penalty. Doesn't mean that if it turns out that the client doesn't actually have one, that they're going to be winning tax. But I think that if you've asked all the questions and you've documented that it's there, and the client has affirmatively lied to you as opposed to saying, I don't know, that you shouldn't be penalized. If they say, I don't know, then you have an obligation to ask the further question of, do you have, and can you bring us the documents?
Because then at that time you will have incomplete information. As long as the information is complete, consistent, and correct, it doesn't seem off, then that should suffice, in my opinion.
Yes.
We just, as practitioners, nobody wants to add one more to the whole pile. That's always the problem, right? There's too many that we're waiting for them to call us back with their answer.
Again, right? You want to finish.
Oh, sorry.
It's your workflow, right? Every office now has workflow, and if you can get it over with in one interview, as opposed to putting them on a stack and having them come back and follow up to see that there's a work authorization. More people are just trying to get the information from the client, document the information in your file, and then move on and get these returns filed. Especially most of these clients, they want their return yesterday. They don't want a delay in the preparation of the return.
Fair. Thank you all. Will you speak, I don't know who this was addressed to, but will you speak about the work-only authorized Social Security number? Can you explain how the credits will work, please?
I can probably take care of that one, which I don't know if you remember, Julie, that when we had a stoplight, right? We had the green, yellow, and red. The green one is an unrestricted, meaning that the Social Security number doesn't really have a legend, right? It's for green card holders, for U.S. citizens. That one, we really don't have to ask whether they have a valid work permit. However, for the yellow one, it becomes a little tricky because we have to do a two-layer test. So the two-layer test is because they have a legend on the Social Security card itself. And it generally says with DHS authorization. So therefore, in order to be able to claim, like let's just use the child tax credit, for instance, the Social Security must be issued before the deadline, including extensions. But then we have to ask an additional question whether the work permit is valid at the time of filing of the return. I know Frank covered a little bit about the extension. You may file an extension to preserve, that right to claim. But in this situation, when we have that yellow one, looking at the stoplight, that yellow Social Security number, which is the restricted one, is going to be depending on the work eligibility at the time of filing of the return. And I do want to mention one thing. Remember that there's really no published revenue ruling or treasurer decisions that addresses as far as a lot of this stuff, but there is some frequently asked questions and instructions, and also the interactive tool at the IRS, which we could rely on for now. So remember that if a preparer really just kind of says, well, no, because 32M, IRC 32M says that as long as they have a valid Social Security number at the time of issuance, that should suffice. Well, you're kind of operating on your own at this time. So it's kind of like you need to make sure that we understand that that the actual frequently asked questions, it's not authority, but we can rely on it because the IRS can provide additional guidance to fill the gap. That's why we're telling you this.
Okay, thank you so much. Zinni asks, what happens in cases where taxpayers obtained a green card but did not update the Social Security Administration? Do they need to update it, I guess, before they file? Because they can't provide us with an employment card. Anybody have a thought there?
They have a green card?
Yeah. I think this is the person who had to change his status, Frank. They were here legally, didn't have a green card, and now they do.
If they have a green card, they're in the green light. They don't have to go to the yellow light.
I will just document the question, right? You're a resident alien, green card holder. Yes, okay, it appears consistent. The reason why does your card does have a legend? Because I haven't gotten updated. Okay, just ask the questions and record the answers and the questions.
And don't forget to document the questions. Document the questions. If it's not documented, it wasn't asked.
Please talk about work permits, because this is a topic that really blows our minds during tax season. Not sure what the context here is, other than you need to have a renewed work permit.
Yeah, I think, John, a lot of the questions are a little bit repetitive. Comes down to if you have a social security number that's in the yellow, look back at the PowerPoints, everybody. If it's in the yellow where you have, obviously red does not qualify. We're done talking about that one. They may qualify for the other dependent credit, right? But if you have the yellow one, you have to verify that the work permit is valid. And that includes also for EITC. And just to kind of summarize, remember that for the child tax credit, the taxpayer or secondary taxpayer have to have a valid social security number and has to have a valid work permit to be able to claim a credit, the child tax credit. The child tax credit having a valid social security number does not suffice only like it used to. Because remember, back in the day, you can have an ITIN holder claim the child tax credit, not now for 2025.
All right, there's a bunch of questions about expired cards and should I file an extension? And I think these are things that you guys already covered pretty well. What if I expired exactly on December 31st? Here's one. If you prepare their return every year and collected their card at the beginning, do you have to collect it each year, or is the original collection considered to be contemporaneous? Jason would tell you not to collect the card, but anybody else want to comment?
You know me well, John.
Yes, sir. Now I'll add, I think because people's situations can change, if they weren't a U.S. I would have, up until recently, I would have said if they weren't a U.S. citizen, yes, you should ask if there's a change each year. These days, even if they're a U.S. citizen, you might want to ask, did you expatriate? Did you leave? Are you no longer a U.S. person?
That's true.
Okay. Here's one, maybe. We've lost business because offices around us are giving taxpayers the credits with invalid paperwork. If you're not an enrolled agent, a CPA, or an attorney, consider becoming one in the next couple of months, because I think you're going to have a lot of representation work available to you. Anybody want to comment? I mean, this is a problem, and in the long run, being an honest person, following the law will keep you a license and keep you in business and give you a good reputation.
It's very simple. Remember that the IRS may issue the refund, but it doesn't necessarily mean that they get to keep it. That's the one conversation that you have to have with the client. And you can just stop this scenario and go back in time when they used to claim a bunch of fictitious credits. The IRS will sometimes issue the refund, and then they will try to get it back. So therefore, it's important to educate. We're not just tax professionals. We're in the education business. We're educating taxpayers. Okay, so you have to let them know, okay, if you decide to go to another office, knowingly that you don't really qualify for that credit, and they do claw back that money, you're gonna have a hard time also to get a penalty abatement eventually, because you knew about this.
And let's not forget that the IRS is making it easier to report fraud and things like that. If you look into the crystal ball, I can see preparers. I actually saw stuff on Facebook already. Preparers saying they're going to report other preparers, and there's taxpayers saying they're going to report other taxpayers. So it is going to be easier to report. So I understand that the mindset of losing business, but you might be saving yourself a lot of headaches, by letting that business go.
Hey, Frank, we do a whistleblower class as part of USTCP, right?
Yes.
Is that this year or next year?
It'll probably be near the end of this year, because
Right.
we'll be upgrading it.
We have the last whistleblower class recorded, but the framework has changed and it's gotten a little bit easier. I mean, if you want to see it, Frank's 3-hour class on whistleblowers available online. If you can't find it, email us. We'll send you the link It's free, 3CE if you take the quiz, and that'll be updated later in 2027. Watch, that's the once a month class for training for the USTCP, and then Frank does that for free for you.
And a few of these classes, a few of the whistleblower cases and the prepare audits have started from whistleblowers, right? There are cases where the whistleblowers have been employees of the business or employees who left the business because of the practices. They've been clients of the businesses. So there are a fair amount of these cases that are brought by people who just have a financial incentive to put the tax preparer out of business.
So here's a different question. For 2026, DACA recipients will not be able to get the refundable credits or the other dependent credit. Or the American Opportunity Tax Credit. This is a question.
Well, remember that we're looking at the 32M, which is for EITC, to address the EIC and the child tax credit. The Social Security number requires that number be issued before the deadline, and then they also require the valid work permit. So the DACA, it doesn't really affect for the eligibility to claim the credits. It's more of the whether the Social Security number was issued before the deadline, and in addition to that, if they have a valid work permit at the time of filing the return.
Okay. Are you saying that for 2026, H-1B visa holders cannot claim child tax credit, advanced child tax, additional child tax credit, and other dependent credit?
It's the same answer. It's the same answer. We look at the Social Security number, right? If it allows the individual to work, and then we look at the work permit if it's eligible at the time of submission. Not unless Frank wants to add anything else or.
No,
the one thing that could be unfair with an H-1B is they run on a federal government fiscal year. So you'd have folks with a September 30th expiration at the end of a third year, and they would not be eligible for the credit. So that becomes a planning issue, right? A third or the end of their sixth year. I'll give this to you, Ruben.
No, I want you to read it, John.
He has a restricted Social Security card, but he does not have permission to work or live in what city? I don't know what Califica Para is.
Yeah, so it appears that there's a Social Security card out there that doesn't have a restriction, but it appears that they don't have neither a U.S. citizenship or a residency. Do they qualify for EICT? If the Social Security number, this Social Security card, it appears that it was issued to benefit from a federal benefit, it appears that it's not valid, so potentially they don't qualify for any of this credit. Why? Because it appears that this is like a red light one. Not unless they had a Social Security number and it was a green card holder and the green card expired and they never renewed it, then I could see it. But then it would be they won't have a valid permit to work, so you can't claim the credit. Right, Frank? Or
that's basically it. I mean, there's something about the situation that makes you question it, right? Why is this card wasn't issued to work? And then you still have the other things like where's the kid? Where do they live? Where's the kid? Where are they working? There are things that make you ask questions.
Yeah.
Things that make you go boom. This is a little bit different than what we've heard. Could you clarify the proper procedure when taxpayers are citizens or permanent residents and the Social Security cards do not contain any legend? I think you stop, right?
That's it. That's green.
Green light.
Right. Due diligence completed. Thank you. When a child has a social security number which says valid for work only with DHS authorization, does the child need to have an EAD to qualify for the child tax credit, even if they are 2 years old? If they stay under the same legal status and their social security number is valid for work. This was a big question in the Ukrainian community. The folks that were here under the United for Ukraine and other humanitarian programs, these folks that they didn't have a lot of money and they are going either to clinics or paying attorneys to get these things done. They focused on getting the parents renewed and didn't renew the minor children, and it's a problem. If you guys want to ask here.
I would say if it doesn't have a valid work permit and because they didn't renew the EAD, then
this is for a 2-year-old child, Ruben.
They shouldn't have had that social security number to begin with.
Yeah, so then it's going to be a red light one.
Even under those humanitarian programs, the children didn't get social security numbers?
Not with that legend.
Yeah.
Okay.
Right.
Okay.
I don't think that's a TPS legend. I'd have to go back and look at it, but shouldn't be that legend.
Weren't those programs TPS programs?
Yeah, no, that's what I mean. That's not what I would say if it was TPS.
Like I said, I didn't see any of them personally. I just know what the chatter was.
Yeah.
Okay. I don't know about that. Rania in Alabama asks, so who are the qualified aliens for refundable tax credits? I think we probably covered that, right? But right,
green card holders.
Anybody that qualifies as a green or a yellow.
Green card holders and somebody with a work authorization. So somebody, a DACA with a work authorization. Those few valid TPSs left with work authorizations, visas that allow you to get a social security number with a work authorization.
I think that question comes because there's going to be a change in 2026, but that's the future.
That's the future, guys. They're not going to get anything.
The lifetime learning credit does not have due diligence requirements. Can you please comment?
That is correct. Let me clarify that. And they may be asking this because the IRS website actually had lifetime learning credit as one of the due diligence benefits under 6695G. They recently changed that, but the due diligence under 6695G applies to only EIC, the dependent credits, which is child tax credit, additional child tax credit, and other dependent credit, as well as American Opportunity Tax Credit and head of household. So lifetime learning credit does not fall into that category.
Thank you. Judah Callis, hello EA, hello Judah, in New York City. People who have political asylum approved technically don't need a work permit. Their social security number is valid. He's asking that as a question. Anybody have a thought?
No, that's not so. I mean, because you get political asylum and they take it away all the time.
Yeah.
Right? There's 2-year political assignment, 3-year political assignment. And then think about all the ones that were just canceled and said, now you got to go back.
Mm-hmm.
All right, this is different. Is it an issue of due diligence knowledge, questions, and their answer is in a language other than English?
We haven't given back the Statute of Liberty.
It's close.
I would say to a practitioner, if someone came in and answered questions in another language, to me that would be incomplete, incorrect, or inconsistent. Obviously, because I can't understand what they're saying. So that would I would say that's an issue if you can't assess the information properly. So we would have to be able to assess the information.
Thank you. Interesting question. Do you ask every person who has a social security number whether it's valid for work, or how do you decide who you must ask? We used to talk about this back in my block days. Is you don't want to come across as a racist or discriminatory. How do you frame these questions? And one answer is you ask everybody. But if you guys want to comment.
If it has a legend, right? If it has a legend on the social security card, then that's when you start asking all these other questions. You either have a yellow, if you have a yellow, you got to ask the questions. If it's a red, where it says not valid for work, then pretty much done talking about the child tax credit, EITC credit. You may qualify for the other dependent credit. Or if you have an unrestricted one, which is a green light, then you really don't have to ask any of these.
The electronic filer handbook, at least since 2014, Pub 1439 or something, has said, or 1357, says that you need to see a picture ID for any new relationship that you have. So one way to frame this is when they first become a client, you ask, can I see your social security card? Can I see your ideally government issued ID? You document all of that, and then that helps you frame your current questions and any future questions, because as a new client, I ask to see those documents. It might be a way to do it. We're almost to the end. Hello, Mila in San Jose. H-1B has a social security number, spouse does not. When applying for the ITIN, does the couple qualify for the standard deduction for married filing jointly? Yes, if they both live here, and if they might have to make the first year election depending on their facts and circumstances. That's a good question. Oh, this is it. Jason, this is a good one for you. Does a recorded call with a client count as documentation? I'm a virtual preparer for due diligence purposes.
That is a good question, and I am going to say no. I'm going to say it. I mean, other than I don't know if there's any type of legal issues with that. However, even if there's not, if you are recording some type of call, whether it's a Zoom call or whatever it may be, you're going to want to be able to keep something in your client file. So you're going to want to kind of transcribe the recorded call to some type of notes or something, because you're going to have to be able to present the notes to the IRS in the event of an audit. You're not going to be able to present an audio recording.
Some of these systems do that. We have Ring Central, and it does create a transcript of the call, and we have an automation that it dumps it into a drive file to be sorted later. We never get around to sorting it, but
that'll work as long as there's some type of transcript, because keep in mind some due diligence audits are strictly correspondence, so you may have to mail in or email or I'm sorry, upload into the portal your documentation and all your files. So you're not going to be able to do that with any type of audio recording or video recording. So you're going to want to have some kind of transcript of your conversation.
So this person says thank you to all of you for coming on and speaking for them, and they appreciate your generosity and sharing your expertise. So thank you very much, Nora. It's very nice to have some appreciation. And then we're going to go return phone calls and get yelled at by people. So this person says there's no rule that automatically disqualifies DACA recipients from claiming credits. Eligibility depends on having a social security number and meeting the other requirements, not DACA status itself.
Exactly right.
Correct.
Yep. Okay. Okay. All right. I want you guys to address this one. It's the last one, only because it's I don't want people to walk away disturbed. So we can get criminal charges if we prepare tax returns for an ITIN holder. Anybody want to address that one?
I can. I've been threatened with it. Can't be criminally charged for preparing a true and correct return. You can be criminally charged if you aided and abetted, if you the employer from issuing from hiring undocumented workers and circumventing the rules designed to bring to light that he did hire, or he or she did hire undocumented workers. But merely filing a return reporting historically generated income truthfully, without attempting to disguise the social security number, address, or other identifying information about the taxpayer, will not result in criminal charges. There are also limited times when you could prepare a return, pay the tax, and assert the Fifth Amendment on the return for some information that could result in criminal charges against the taxpayer. Right? That's it. Look, don't lie. At the end of the day, the rule about tax returns is as simple as don't lie. Don't try to help a taxpayer hide relevant facts from the United States of America, even if you think that the law and enforcement of the law is wrong.
Wow. Thank you, guys. I want you to know we had almost 500 people come on to this, probably more if you do a count of unique people. And a bunch had to drop off after an hour because we said it was 1 hour. There's still almost 250 people on here right now. So that says a lot about the value you're adding and about the need to have done this. So thank you all again. I appreciate that you all came on such short notice in my disorganized way. So
if we get a lot of questions, right? If you guys get a lot of questions and the same questions, I'll put a supplement out to the article and send it out to everyone, right? I think we diligently, using that word, try to find everyone the authority they need to understand what the law is and to rebut those professionals or taxpayers who make them feel that they haven't done the right thing. All right. And I was going to tell you, the IRS was so impressed with the work that we've done here today that they may include part of what we're doing at the IRS forums this year.
That would be great.
It was very cool. You can't get enough due diligence. Everyone thinks of ethics as my 2 hours a year and that's it. And it's a lot more these days.
No. Thank you again.
Thanks, everybody.
Thank you, Ruben. Thank you, Jason. And again, I want to see you all at the barbecue, and we're going to repeat like some good information while we're having burgers and all unhealthy food.
July 26th in
I think it's Ecuador, Germany. Remember, the World Cup is during the barbecue. So I think it's Ecuador, Germany.
Wednesday, June 26th in Hackensack. You can get Frank's, and the CE is in West Lyndhurst at the Bergen Community College campus. 4 hours of CE. We're going to have this year a Ask the Wizards type thing. Folks like Jason, Frank, Ruben are all going to come on and be able to answer your questions. That's only if you come to the event live. You can only get the food trucks if you come to the event live. Do we know who the musical guest is?
We haven't decided. I'm going to see, because we're going to try to get music of the World Cup. So, right, the food trucks are going to be geared towards the teams that are still in it at that time. right? So, and some of the moderators of the different panels will have jerseys of the teams that are still in it. This is the theme this year is the World Cup, right? That we love the whole world. In Bergen County, New Jersey, we love the whole world, right?
So
And
Frank,
we especially love tax professionals.
9 panels, 4 hours of CE, the Ask the Wizards, and all the food and the party afterwards, right? The whole day. How much is that?
Free.
It's free, all right? We get a solid 500 people in person. Yes, some of this will be available online and live online, but 500 people in person, some of the best networking and the nicest people you're going to see. There's probably 50, if you count all the panels, probably 50 different speakers and moderators. It'll be a great event. So hope to see you there.
We are one tax controversy community getting together, talking to each other, talking through our challenges from the return preparer through the judges on the tax court that are listening the case. I mean, how often do we get all of those people coming together, plus all of the IRS people coming together, so that really we all understand we're all in this together, right? We all only succeed if the Internal Revenue Service succeeds, and they only succeed if we succeed because we bring them voluntarily, without a gun, $5 trillion a year. Think about the importance of the United States tax professional to all of our lives. And I think that the IRS really does know that on the day of the barbecue. We all, break bread together. So I really do. All of you on the call, you're all 500 of you on the call, or 200 of you're all invited. I mean, it's an event for tax professionals.
If you take, by the way, last thing, and we're going to close it. If you watch this on YouTube, to get the CE, you got to take the quiz. There's a link in the comments section of the YouTube stream. All right. Thanks again, everybody.
Awesome. Thank you.
All right. Thank you.